Good morning, everybody. Let me see. Hope everyone's been doing good. We've had a good week so far. Pretty amazing day yesterday. So yeah, we'll see what happens today. So we got news at 5:30, basically in 7 minutes, six minutes ish, right? And then we have news at 7 o'clock. So because there's one news event early, and there's another one spread out a little bit later, you got to keep in mind that manipulation could be the play up until this last news comes out. There's no red folder, but it is orange, so it should still have some volatility. All right, so we shall see what happens. Good morning, my friend. Glad you're able to hop on. Yo, we need to set up that 101. We got to set up the 101. Stupid internet. It's always a freaking problem. But yeah, so we could probably do Sunday, by the way. Or maybe early morning on, let me see. Actually, we could do it tomorrow, if you want, in the morning, because we don't have any news. I can get up a little at 3 a.m., 4 a.m., and we could do like an hour or more. Or of course, if that's not available for you, we can do it on Sunday or Saturday morning. Whichever is good for you. But yeah. So Thursday we have some FOMC conversations. Again, there's going to be a lot of anticipation for the federal fund rate announcement, which is in 3 weeks. But yeah, we'll see what happens. I am very much behind the fact that these equal highs up here are going to be targeted. I've been talking about that all week. I've had this outlined all week. We're above this fair value gap in here. So I'm very confident that we're going to be able to see this go to the buy side. So that is where my trades are going to be focused, unless we were to disrespect this volume imbalance and the fair value gap. DXY still looks like it's kind of just in a range. Does look like it's still favoring downside. We are staying inside this daily fair value gap. So yeah, with that being said, let me fix this real quick. Straighten out this stinking camera. All right. So yeah, if you were here on Sunday, you would, and yesterday in my private group, you're hopefully fully aware of what we've been anticipating. Everything that we've wanted to see has played out. Yesterday we caught 3 trades, called like 6 trades, but we caught 3. 100% strike rate live. So yeah, it's been a pretty solid day or week so far. So everything still seems like it's in alignment, and now it looks pretty obvious that price seems like it wants to target the buy side, and we've now turned this into an inversion. All right, and we'll see what DXY wants to do alongside that. All right, we got this as a potential market maker buy model. I talked about that yesterday too. So I'm going to stick to that. We got the beautiful response to this fair value gap. Now, if this again was to be violated, that'd be a problem. But since it's not being violated, it looks like it's just respecting it. It looks pretty nice. We do see an SMT here at the highs. The Dow is the higher high. The Nasdaq and the S&P have the lower high. Okay, So we're going to keep that in mind. We're going to monitor what that's going to lead to. But if it was to drop and get below the daily fair value gap right here, that would bring my attention to these equal lows down here. But as long as that holds, we will continue to seek internal range liquidity to external. Internal range to external up until we get to the buy side up here. And again, the validation for buys or invalidation is if we close down below this level. Okay, so hopefully that's easy enough. And that's going to be what we stick to the whole entire morning, unless something changes. We got Friday's low down here. So if price was going to want to break through these levels, like I said, our first target will be the wick, and then it'll also be Friday's low. Okay. And we got Friday's high up here as well, which is going to be what we are rooting our buy side delivery on, and that's pretty much what we're going to do. Okay, so hopefully that makes sense. News is coming out in 1 minute, so we'll see what happens. So yeah, and if everything goes according to plan, we should have yet another awesome morning as it was yesterday, and then yet another Sunday call that was pretty much 100% correct. It's going to be almost 8 straight months. We got, what, 5 days till the end of the month. It's going to mark 8 months of me being live, and every single week, pretty much on the higher time frame, we've been 100% correct. Still striking at a 75 to 81% strike rate. This month kind of lowered the high 80% because I took like 5 losses this week, or this month overall. And everything's been, you know, shown and talked about live. So yeah. And yesterday today we're coming off the heels of a 3-trade winning streak, 3 trades in a row, which I shared in the free Discord, and I was again live with my private group. For those of you in my private group, the recording should have been uploaded, along with some of the other ones from this month, both wins and losses, you know, high resistance days and low resistance days. So as always, there's a ton of value for you guys to dive into. So let's get the broker ready. And yeah, we'll wait for time. Just because there's a news at 5:30 doesn't mean that you take a trade at 5:30. Just because there's news at 6 or 7 doesn't mean you take a trade right at that time. You still got to wait, right? You got to have your model play out. I did drop a checklist in my private group, basically an A+, B, and C style trade, and how to think about that. So for those of you, again, in my private group, that should be sitting in the pinned comments for the trading plan development section. So definitely dig into that. Let me know if you have any questions. Okay. And as far as what we see here, do you guys have any questions about anything we've talked about? Is it clear what we're looking for? Hopefully it is. But yeah, if you guys have any questions, let me know throughout the call. And yeah, we could try to get that answered. But yeah, we're going to be very patient. You know, price is kind of doing what we'd like to see it do if it's going to go higher, because we're below the weekly open. And I'm not sure why it doesn't want to show. Oh, there we go. Yeah, we got the midnight open and the open that just passed for the bond market. So if it's going to be a bullish day, we'd like to see maybe one more punch lower. May not want to do that because we used yesterday as a fake out to the buy side to trap people to the buy positions, setting equal highs. Took a little bit of it. But for the most part, if we were looking to buy, which is what I'm aiming at, this is exactly what we want to see for the week. All right. So yeah, we could already see, you know, we are in consolidation. So if we go over here to chart with all our markups, this little box in here, that's the first 30 minutes of the overnight range. When price is consolidated, you want to use that as a reference. If we stay above that, if we can also stay above the first presented fair value gap, and if we could stay above or have something to target in terms of a regular trading hours gap that's above price, if we can hit that and then get above that as well, those are very strong real-time indications the price is going to continue in that direction. I mentioned this potentially setting the low of the day, low of the week yesterday, but it seems that it drew one more time, and all it really did was come in and close in the rest of the daily fair value gap low. So now that is completely balanced. So we're now getting above that same fair value gap, the high right here. So now we've pretty much balanced that fair value gap. Okay. It also kind of did that here, right? Because it traded through it, right? We had displacement here that created the daily fair value gap. And the price basically has now not only went through it once with a displacement, but now it's came back down, cleaned it up a little bit further, and then we're now resting above it. We do want to watch this run up to the decline. We want to see how that range is going to be respected or not. Because if it is respected and we do get a displacement that gets down below this, daily fair value gap low, which is our invalidation level for buys, that'll set the stage for us to have things behind us to take shorts. But I'm not behind that. If DXY is going to continue to drop, which I assume it's going to. But yeah, we're still early in the session. And we just had a news event, didn't really do anything. That gives me an indication that price is probably going to need to mature throughout the range for us to see the actual move. And if by 6:30 going into the first macro, 650 to 710, going into that silver bullet, if nothing has transpired and we're still going sideways, that may be the vibe. You know, they may they may want to hold price a little further. Okay, so we'll see. We're not going to assume that until it proves it. But for now, there's nothing to do. We do got a fair value gap in here you can watch. I'm just going to go with the fact that we're inside the daily fair value gap. I think that's more than enough to watch. I don't want to make it too busy for you guys. I want you to see what's important. Right? We got this fair value gap in here. So that's another portion of validation that we could watch. And if it's to be violated, right? If it was to get down below this and then get down below into here, then obviously it becomes much more clear in that regard that buys are not worth pushing. You know, if this was to get traded through, there's no thinking, oh, it's just digging to a deeper discount. You know, that's a very common thing because we get married to our bias. But you have to be flexible, you know, and you know, to be flexible, you got to have an understanding of what allows you to be flexible, you know, so so yeah, hopefully that's clear, right? We see an indecision candle for the day. We have a bearish decline here for the week in terms of power 3. If we're bullish and price is going to go higher and we want DXY to go lower, this is exactly what you want to see, because they're coming down to purge out early buyers or buyers that rush their stop by chasing this run higher on Friday. You know, so it makes sense, right? So yeah, let me know if you guys can hear me okay, if the visuals are clear. Still, I'm getting these messages on the YouTube studio that something's not right. If you can give me a 1 in the chat to confirm that both those are good, the visuals and the vocals are good, I would really appreciate it. All right, cool. Cool. Appreciate y'all. But yeah, I do have a feeling that today should be similar to yesterday. When it opens up, it's going to open up. And we're going to wait for the macros. 2 out of the 3 ideas I took, which is generally the case, right? But two out of the 3 ideas that I took yesterday and shared live with my private group and in screenshots for the free Discord, they were within macros. You know, some people, you know, you'll see your model showing, but you just refuse to take it in the macro. Okay, that's like seeing the red light, but running the red light because you're trying to hurry up. You're not trying to follow the rules, you know, and you can get in a wreck because other cars are going to be coming. It's not time for you to go. It's the same with this, you know. It's a red light until you get to a macro. Or if the macro started the move and it looks like it's clearly going to keep moving, you know, you could reasonably bend the rules in that regard. But again, you're going to have to get some experience seeing how the macros perform and how they, like, where their place is inside the each hour, because there's 2 macros each hour, right? The last 10 minutes and the first 10 minutes of every hour. Okay. Some are more reliable than others, right? This macro coming up right here at 550, it's the most unreliable macro, which we took a trade in yesterday. But I showed the difference in delivery, how fast it was for the 650 macro and how slow and, you know, more lethargic it is for this incoming macro here, because we're still technically pre-market open. The open price that just passed at 5:30 a.m. Pacific Standard Time, that's the bond market open. That's when you should be looking at the chart. Okay, that's when you, at a minimum, that's when you should be on the chart every day. Whether there's news at 5:30 or 6:30 or 7 or 8, you still want to be up a little early, you know, before the open. All right, so in trading the open, there's a strategy to do that mentally, but it revolves around navigating the daily range and power 3 throughout a day, throughout the week. So yeah, it's not something to just jump into, because it's going to take advantage of people that are not aware of how to navigate manipulation. So yeah. So yeah, hopefully everything makes sense. We're going to be very calm. It's just another day at the job. You know, no one trade's going to destroy you if you follow the rules. No one trade is going to help you get financial freedom. So every trade you take is just another step, either forward or backwards, or just a step in place. You know, with break even, you know, losses are not necessarily bad. unless you break the rules. Then it's absolutely ridiculously massive because then you're going to do it again. And it's going to become a habit. So losses when you're following the rules is not a problem. But losing when you don't follow the rules, that's a problem. Or taking a trade when your model's not there, that's a problem. Because you're training yourself to take trades outside of what your business model is. And if you're doing other things that you're not good with or you don't understand yet, I mean, what good is that besides chasing? The regular trading hours from Friday is nice. Let me see. Talk about that. Regular trading hours from Friday is not. Talk about this right here. This one looks a little more in line with things. Yeah, I don't think it's going to really get all the way down there. If it does that, it's going to disrespect the entire overall narrative that we're looking for. What is that? 23, 238. Yeah, it's too far because we got this. You got to remember, we got these levels that we're trying to watch hold. Right? We have shifted above this high, so this high to that low becomes a BPR. So that alone, unless price was to displace and break through these levels, which, like I said, is an invalidation idea. Unless it does that, we're going to continue to want to see price hold to the buy side. Higher time frame still bullish, like we talked about on Sunday. It's just working and accumulating inside this weekly bullish order block. And unless it breaks through those levels, right, and closes below this on the weekly chart and displaces breaking through those ideas that we just saw here on this time frame, like breaking down here, there's nothing telling us that we're overwhelmingly bearish. It may happen, right? Because the anticipation for the overall interest rate announcement, if there's a cut and price is going to be bullish, as it has been for the last 20 rate cuts at all-time highs, basically 100% of the time it's done higher price delivery after that. If that's going to happen, we may, in anticipation of that, want to dig lower. Price is already kind of dug lower, and it reached down for a logical level to have done so. That being the weekly bullish order block. Go to the daily. We came down to a pretty deep discount to sweep out early buyers. Everybody that was in this bullish trend up here that rushed their stop to this low, they were triggered out. And now we shifted market structure on the 1 hour, right? And on this time frame, right, we got PD arrays being traded through. Now again, if it uses this as a shift below this low, and then we get down below these fair value gaps and the volume imbalance, and we break through that area on the 1 hour, right, down here, close below it, then again, you start to build a narrative where it's going to leave these equal highs available. I don't think that these equal highs are going to be left available. That is too clean. Higher time frame bullishness is still intact. We have the daily fair value gap that's now been inverted, and this bounce here is literally from the top of that daily fair value gap. Right? So unless that's proven wrong, we're going to stick to that because we are married to the higher time frame and we understand power 3, right? And if you look at this, right, you see that consolidation, it's broke down to a third standard deviation using the central bank dealers range. So that is beautiful. Look at how it stopped, right? In the low for this retracement here literally came directly to that, and it closed in the daily fair value gap. So that is pretty telling if this continues to hold above the order block, or I guess you could say that's an order block here. More or less, this up candle is actually a bullish breaker too. Low, high, lower, low. breaker, fair value gap, inversion. So lots of reasons for now to continue to trust higher time frame bullishness. All right, but again, we have our contingency plan. I expect that this will be the low, given the fact that it traded into this going into Tuesday, today. And now we just need price to stay above the daily fair value gap here. And stay above this, because again, this high to that low, up until this point, has beautifully acted as a balanced price range. Right, so yeah, that's what we're going to stick to. All right, so yeah, hopefully that makes sense, guys. If we move up a little bit, going to look at this delivery in there. Let's see if there's an order block. Take this swing low, measure it up to the high, came right to equilibrium. This low took out sell side, did leave this one, but it still purged liquidity. And then it quickly displaced higher. So now that's a new dealing range if we're going to go higher. So then you'd measure from this high to that low, get equilibrium. Ironically, price came right down into it. And that's ironically got a daily fair value gap lined up with it. And the BPR here is pretty beautifully being respected. It's also an order block. It's also a breaker if it continues to hold like this and DXY continues to fall. DXY is sideways, so you want to keep that in mind. It may cause a problem. It is the end of the month. You know, we may not have enough juice to try to get up here. You know, we're not going to assume that, right? But, you know, it is the last week of the month, pretty much. If I'm not mistaken, yeah. And then next week starts the new month and our new IPDA data range projections. So yeah, and it's been pretty volatile, just kind of an indecision candle for the month. Right, very small bullish indecision candle. After we've had 1, 2, 3, 4, 5 straight weeks of bullishness. We do have a monthly fair value gap in here. So if you're looking at this price delivery here and it was the 5-minute, it'd be pretty reasonable if we do see that this does not want to hold and it wants to start targeting the downside. You know, bullishness overall doesn't get upset, at least from this time frame, long term, unless it was to, you know, violate something like this. Then it may look to dig deeper into that. This is again the monthly chart though, so it'll take a month, each month for each new candle to form. So to get down into here, if it was to do that, or even to get up into this high up here, it may take, you know, a couple weeks, sometimes a couple months. You know, but you want to keep tabs on this type of time frame. You want to make sure you know where the levels are, just in case the lower time frame starts to show you something worthy of, you know, changing the overall delivery from bullish in this case to bearish. And again, we do have the SMT here. Okay, got the high here, lower high. So again, this would be justified if it was to displace below this fair value gap in the volume imbalance. Okay, and that would, you know, again, put our attention to the downside potentially, and then maybe even get down to the monthly fair value gap, which is also, as you could see, a weekly fair value gap that we've talked about. And if it was to do that, it invalidates the bullish order block. So you can start to see how the narrative becomes more clear of what it's trying to do. This would turn from, you know, continued bullishness to then seeing price go from stops to stops, right? Not, you know, stops to inefficiencies, or internal PD array like this order block back to stops, being the highs up here. So because it's the end of the month, again, you got to be very cautious. But we're going to stay behind our convictions. The price is going to still go higher. DXY has not shown us any different. It did take out the low here. Now we're kind of back in equilibrium, just based on the current price delivery. So, so yeah. And you see these overlapping candles. So much sideways movement. Just more reason to not be too aggressive. And we'll continue to wait and watch. But yeah, this whole fair value gap was also filled here, kind of across the board, huh? So yeah, we're trapped between the daily fair value gap, right? The overlap here, which again is going to be something that we root ourselves in to trust that it's going to go higher if it holds, but it's also going to be the trigger to be flexible. So hopefully me repeating the view here makes you understand clearly exactly what we're looking for. What's up, Mike? Welcome, my friend. I pretty much have all my private group students in here right now. From Mike to Fotis to my brother. Guess we're the only ones who want to make money today, huh? But yeah. How you doing, Mike? Hopefully you're having a good morning, bro. Yeah, Fotis, Tyler, Mike. Mike, you're kind of a little late. We already kind of talked about stuff, but from Sunday and yesterday, Mike, does everything make sense? And for, Fotis and Tyler, does everything make sense, what we've been talking about? It's not much different of an opinion than we had on Sunday, for those that were here on Sunday, but and yesterday, obviously, in the live call, in the private group. But yeah, is it clear what we're looking for? Tyler said, yeah. And then through the session, we'll see if that SMT has any impact. That SMT being the failure swing here on the S&P and the higher high on the Nasdaq. The Dow. All right, no worries, Mike. Yeah, we're basically looking at this inversion fair value gap in here, the overlap, to see if it's going to hold or not. And that would then push us up to target the relative equal highs and the rest of this. Or if it gets violated, and then that is used as resistance, that'll potentially take us down and give us a reason to target Friday's low. So Friday's high and Friday's low are two targets that we're inside of, right? So even if it's going to come up here, or even if it's going to go down there, it's going to still have to break through one of these levels. And what's close in terms of PD arrays within that specific school of thought, we have the volume imbalance, fair value gap, kind of mix them together. And then you also have the gap up here too that's been traded into. And then we have this that's overlapped this. So if it's bullish, it's going to have to see this hold, which is what I'm going to assume, what we've been assuming, both today and then, of course, what our assumption was on Sunday. Right? But again, if that was to be invalidated, then obviously there's no need to push for buys too aggressively. We could then just try to adjust and then easily target Friday's low as a logical countermeasure to failed buys if that is going to be the case. We're painting scenario for both, but guess what? We're favoring one. So as I always say, I paint the contingency plans just in case, because you can't just think you're only going to be correct. You have to have plans for alternative perspective, right? Just in case. So you're not caught with your pants down, okay? So hopefully that process has made sense for the last couple months with you guys. Both here on YouTube and then in my private group. Potentially more so in my private group because they just get more time. They're just with me every single day pretty much. And the stuff is just constantly repeating. It's constantly the same. I don't change it up. It's always this system that we employ, which I've broken down into pieces for everyone to think about, So from the daily range, we're into a discount. Yeah, we're definitely in a discount. If you take this low to that high, it's a discount based on that, right to equilibrium. Not a super deep discount, but if you take this low extreme to this high extreme, we are in a pretty massive discount. Okay. The lower portion over here is an extreme discount. The upper, closer to the equilibrium, is a normal discount. The upper, level here, it's closer to the first half, I guess you could say, of the upper range above equilibrium. That is a normal premium. Price getting way up here is a massive premium. And you can kind of see that the massive premium levels deliver price lower. We came to a massive discount level below the lower quadrant. And then price is basically given a displacement. So you can kind of see what price does, when it gets to an extreme discount or an extreme premium. Generally, even if it's just going to retrace away from that, it's going to be a pretty dynamic move. We can also use this as a graded price swing. Okay. This is the overall graded price swing. You can kind of see too, if we take this as if we were grading this one, you could see the 25% level, 50% level, 75% level. You see how they're used, right? So this is a way you can grade a price swing. Okay, and then that assists you if you're correct with, like buys, which we call buys all through this. And then we also, made sense of this as well. But this tactic is very helpful for range navigation and just overall, what price is doing. All right, so we got the 25% level in here. See how it kind of stalled out? Now we got displacement. And then now we've just came back in reverse. So we'll see, right? If it can get above equilibrium, we could continue to push this as a graded price swing. And then look at these as dynamic support levels if they're in line with a PD array that makes sense. And just adds further context to your navigation skills. We could talk about grading price swings in more detail another time. But for like a basic overview, hopefully this makes sense. You know that you're in a dealing range also when you have buy side and sell side taken. So like this low taking this low, or this one, right, taking this one. Once we get displacement that takes buy side, a fractal high that's taken, you could see that you could now go from this low to that high, and that could be optimal trade entry. That's what this could very well be right now, right? You take it from the most recent energetic swing low for optimal trade entry, and you measure it from there to there. Like we talked about, it went right to equilibrium, filled in the daily fair value gap, overlapped the previous one, and now price looks like it wants to continue with relative equal highs, which are also lined up with Friday's highs. It just hopefully makes sense. And again, if you guys hop on and you're new and things don't make sense to you, that's normal. Don't think that just because when you hop on, you hear a pretty advanced perspective, which is it's very simplified, compared to what most people try to do. But if you hop on and you're brand new, The best thing that you can do is sit, listen to the lingo, try to get used to what's being talked about, and then just show up every week. Because, I've proven that this works. There's not much more that I can do other than start shoving my profits and how successful I am in your face, which doesn't do anything for you. I do everything except that because that is, first of all, no one's business. Second of all, it's not going to help you, But what I do in the charts, all these different elements, these key things that I point to that clearly for the last 8 months straight live on YouTube for the public has been absolutely phenomenal. Not only that, students are doing it. They come in here and they vouch for it. They also show their own successes, So, don't be impatient. There's something here for everybody. I don't care if you've been trading for 20 years, but you're still failing. I have age ranges from 17 was the youngest to 66 this year because it's one of my students' birthday coming up. So some have traded for 2 years, 1 year, 6 months, 3 months. I have, one of my best students came to me after 3 months of trading and learning about ICT concepts. And now he is doing incredible. He's made multiple withdrawals. I think he had a $10,000 month. That student's name is Harley. I talk about him all the time. And then I have a couple others too that like to be anonymous because, again, you don't want to express to the world, what you do. It's just not, first of all, safe, and it attracts the wrong people and the wrong attention. It gets attention, that's for sure, right? It brings people's eyeballs to it, to you, but it's not necessarily the best attention. So yeah. So hopefully, most of you guys that show up all the time, especially you guys in my private group, you guys have stuck around long enough to see what's going on. Would be about like a month straight, especially if you're in my private group. I mean, you quickly see what's happening. We're here calling the market live, real time, monthly, weekly, daily, hourly, session wise, quarterly, okay, for 3-4 months at a time. And there's not many people doing that other than ICT and a handful of others. So again, if you're new to the channel, if you watch the replay or have hopped on and you're new, just stick to it. Keep showing up. There's something here very valuable for you. And yeah, I try to keep it simple. And it's always the same. So yeah, getting back to the technicals, we got this wick here. So we want to watch how the relationship is with this candle and this one. This is an 8-hour candle. So if we can respect this wick in here and it can displace away, that'd be great. Just further solidifies the fact that we're correct, as is generally the case. And everything that we've talked about today has led up to us potentially being correct. If it does end up being correct, there's your validity to the process and the things we identified and why they're important, because they lead to positive things taking place. We do got to watch what DXY is going to do. It is range bound, so with price being range bound, that could end up presenting us with a problem. Morning Joan, another one of my private group students. Appreciate you guys hopping on. I said earlier, I guess we're the only ones that want to make money today. From the YouTube channel. That's okay. The replay will be very valuable if this does go higher, or even if it fails, the replay on this video, given how to the point clear it's been for us to kind of know what's going to happen in our flexible contingency plan and just how we came to determine that process in itself it's already going to make this call very worthwhile. Maybe I should change the title to something related to that, because that is pretty much the main element here, what we're waiting for. Is this going to hold as a balanced price range? Is it going to hold as a bullish breaker from, I believe, that 1-hour chart? Two-hour, right? Low, high, lower, low. Swept sell side. quick displacement overlapping the daily fair value gap, basically inverting it, with the possibility for continued bearish DXY. It is an absolute mess. This is high resistance. When DXY does this, expect to lower your risk. Like right today and this week in general, so far, risk has been already cut because of what the condition is and the fact that it's the end of the month. The start of the month, the first week, you lower your risk by half. The end of the month, you cut your risk by half, especially if you've had a bad month or coming off of a bad week. You know, it's very important. That's a non-negotiable idea. It's every single month. That's how I personally view things from a risk management perspective. It's all cut in half. We've cut our risk in half a lot this year, you know, but we've been able to really smash stuff. So because that's the case, doesn't matter how small your risk is. You know, you guys that are here all the time, you see that I may call like 1 or 2 or 3 trades, but we're pointing out like 6 to 10. You know, like, oh, this could be a good opportunity. If I didn't take a trade earlier, this would be a good opportunity, you know, and we talk about why. So, you know, contingency plans, how to find continuation moves, bias and narrative, risk management. I mean, these are all things people want answers to. And I, you know, perfectly package them, at least from my opinion, in a very simplistic way, you know, so... So if you guys got any friends that, you know, want to learn, if they're negative, don't even mention anything to anybody. Whether that's about this community or any other stuff that has to do with trading. If they're just like a negative vibe or they doubt you or any of this stuff without doing research, I mean, don't tell those types of people anything, especially about this. But if you guys do have people that you think can get value from this, maybe they're just starting, or maybe they can add to the conversation, or maybe they've been trading for years, but they still are getting beat up, you know, bring them to the channel, you know, let them know. I like having good people. Word of mouth is definitely what I prefer versus doing ads. I probably will never run an ad. You know, maybe I will, maybe I won't. More likely I won't though, but you know, I've just noticed that when my students bring people, for one, they are more focused because there's a trust there. You know, it's quickly created because, you know, I'm helping someone, they go help get someone else over here so then I can help them and you can help them as well. And it just becomes a more tight-knit community. You know, smaller that way, obviously, but I mean, it's crazy the things that some of my students have been doing and the things that some of you guys are going to do very soon, sooner than you realize. You know, a lot of you are much further along than you like to believe, simply because you may not be seeing a monetary explosion taking place. That doesn't mean that you are not making absolutely insane strides when it comes to your understanding of the market and just, you know, how to engage. You know, so yeah, definitely spread the word if you guys feel inclined to do so. Don't forget to like the video, subscribe to the channel if you haven't already. If you're new, we do this every week, obviously, and you know, you can just go through the catalog of videos on YouTube the last couple months, and you could just see some days have been harder than others, but you know, high 80% of the time we're knowing what's going to happen. But even knowing what's going to happen, sometimes the day will be a bit harsh with manipulation. Maybe there's a news event, maybe there's bombs dropping somewhere, or, you know, something takes place that results in price, you know, allowing you to be correct in the higher time frame, but getting you stopped out on the lower time frame. You know, that's another thing. That issue is something we talk about here all the time as well, especially in my private group. Many of you guys are here from my private group, so you know, I'm kind of preaching to the choir probably, but I know people are probably going to watch the replay, so just want to make sure that I point some of this stuff out. You know, a lot of stuff is talked about here as well. That's why a lot of people from this YouTube channel over the last year, some of my students like Tony, I haven't seen him this morning, or a couple others. Maybe they'll hop on a little bit later, but they've been passing funded accounts and doing very well just off of what we talk about here on YouTube, aside from the supercharged access plus knowledge you gain. The further the further you could take it in the private group. You know what I mean? Because it's just like a everyday thing, but it's not good. It's not for everybody. So I don't encourage everybody to join unless you're serious. Or maybe you want to be around traders that prove they know what's going on. Not only me, right? I'm doing this live in front of everybody all the time, but there's students in my private group that are there just smashing it too. Like I said, the student named Harley, who came to me after 3 months of learning, I don't think I've ever had a student make almost $10,000 in a month that quick. And he showed it to everybody, and it's all because of the way that we structure things, the way that, ICT concepts are supposed to be implemented. ICT teaches how to do it correctly, but he's admitted that he's made it harder because he didn't like the fact that people were stealing his stuff, and it makes sense. He doesn't want lazy people that are going to rip people off, people that have no integrity, that are impatient, that don't want to improve, that blame everybody for the problems. He doesn't want those people to look at his stuff and be able to be successful with it. And so that's why he's admitted, I think last year or the year before that, it was after the 2022 stuff, because that 2022 stuff was created because, first of all, his daughter was going to use that model. But the 2022 stuff is broke down in such a way where he helps you to simplify what's important in the 2016, 2017 stuff. Because he said he felt guilty because he made a promise to God that if he was able to do this, he would pass it on to other people. But he let his frustrations get in the way of him doing that, right? Which I don't blame him for. If I was him, I probably would have done the same thing. People ripping my shit off like that, and then trying to rename it and act like he never created it. I mean, that's disgusting, right? So because of that situation, he made it difficult. And that's why when you see traders like me or other traders that are successful that say things can be simple, it's because that's a fact. It can be simplified because he's intentionally made it difficult. He's taught in a way, not so much recently in the last year or since 2022. He hasn't necessarily completely made it overwhelmingly easy, although it's much, much, much more easy and attainable now with all the resources like live streams like this and students that are public along with his own videos. It's so much easier now. It's much more to the point. It's more important to figure. It's very easy to find what's truly significant, especially if you have someone helping you. If you're brand new, everything's going to be hard anyway. But at the same time, like I said, it's the best time to be a trader in history. We have access to the markets more than ever. We have more resources than ever, more proof than ever that things like what we do works. So, a lot of the worries are kind of out the window now. So there's always going to be ways to simplify the concepts. And hopefully I've been doing a good job of doing that. I really, really pay attention and have a strong intention to do that when I'm talking about things. It's either this or that. This will lead to that, or this will lead to this, right? And this is what we do on a regular basis. Very organized, structured process from Sunday weekly prep calls to get our narrative assumptions to executions on a daily basis. It's all hopefully not feeling overly complex, because that is not the goal. I could take this extremely deep and be extremely complex and make you guys get completely lost. I can make you guys feel like you want to be dependent on me because of how accurate I can, that I've, proven I can be. But that's not at all my intention. And that's why I'm very clear with what I talk about. I'm very detailed, but I'm also at the same time very simplistic when I teach it. Because simplicity is what's going to make you succeed, and independence is what's going to make you succeed. And if I don't allow you to have that, and also allow you to have that customizable ability with my ability to have multiple models, it does you a disservice. Like if there's anyone that teaches ICT concepts, but they're one dimensional, some students will succeed, but a vast majority will fail. Unless there's non-negotiable things like bias and narrative, because that's not very subjective in terms of process of what's important as an ICT trader. And that's shown every single week. And then when you see it in practice live and how we refer to it every week throughout the live calls. More so obviously in my private group because they have live calls every day. But here on YouTube, it's it's the same thing. And then I put updates in the free Discord as well. Sometimes after the fact, but I show the before the fact analysis. But real time, pretty much every day with my private group, because it's an apprenticeship. You know what I mean? They've invested in me, and I'm obligated to invest in them. And I truly want to see y'all succeed. So this channel and what I do here is not like anything else. There's similarities in terms of process, because again, there's non-negotiables across the successful ICT traders. But what we do here is unique. Just the accuracy in itself is unique, let alone how we get there. And it's the way I have figured out how to apply ICT concepts and how I've been able to learn how to simplify it over the years. Because over the years, you figure out how to simplify it. But that, time window is going to be different for everybody. And some will never get there because they won't submit to the right things. Or they're looking for signals, or their mindset's wrong, or, whatever the case may be. Or the model they're using doesn't fit with them. Maybe they're trying to be a day trader, but they're better off being a scalper or a swing trader. Maybe none of that works for you, and you need to be a position trader because you have a busy life. Maybe the breakers don't work because you can't see it, but you could for surely see an optimal trading tree. Maybe the YouTube model 2022 works, but you can't use market maker buy and sell models because it just doesn't make sense. I don't know how that would be the case, especially here, right? Because I make sure that it's fairly simple to see, and there's hundreds of examples that I've shown since 2021, right? It's been that long since I've been helping people and mastering things for myself too. It's 2019, August 7th. Up until this point, it's been 6 years. Time flies, that's for sure. So yeah. So hopefully you guys enjoy your time here. Hopefully you guys learn a lot. I know that I've been getting a lot of feedback, so I'm grateful. But yeah, you see how, we basically anticipated the need to wait. We have an assumption of what price is going to do. DXY is sideways. Look at what the response is here. What's up, Tony? I was talking about you earlier, bro. I'm glad you made it, brother. But yeah, whenever there's news at 5:30, like before the New York Open, you want to make sure that even in aside from the live calls here, in your personal trading, you want to make sure you're there at least by 5:30, preferably 30 minutes before that, like 5 o'clock or 5:15, just so you're not just like hopping on the chart, trying to take an entry right away. You can get a feel for the ebb and flow of what's happening without feeling rushed. So I think that's a rule that ICT put in the 2022 model. So just for any of you guys that maybe didn't know that, both for the call here, right, every week, depending on what the news is, and then for your personal studies and engagements, you want to make sure you give yourself a reasonable amount of time to prepare. All right. Yeah, again, I appreciate you guys spending time here. You could be anywhere else, but you're here. So, I'll continue to do my best to give you valuable insights those of you in my private group, y'all are freaking amazing, as always. You know, you guys are always there. So yeah, hopefully we get more breakout students this year, but you know, in terms of the technicals right now, just looks like all the different building blocks we talked about are still being engaged. So we got to see what it's going to want to do closer to the 6:30 time. We got 7 minutes, and fireworks should unfold. Where they're going to unfold, you know, we're assuming that they're going to go higher, relative equal highs. But if we break down below this, right, hopefully you could see that clearly. Hopefully the quality's not bad for the small writing, but that's our like bullish invalidation. All right, so yeah. And we'll see what happens here. If it does break down and get below this, basically breaching our invalidation levels, we could look at this high to that low as a mitigation block. Right, remember, a mitigation block is a breaker that has a failure swing. It's pretty much what that is. And similar to how the breaker is, from the high to the low that creates the mitigation block, that's a balanced price range. Right? There's another variation for you guys. So let's look at the bonds and yields. Yeah, the yields are a mess. So I had that breaker outlined. Looks like it beautifully is respecting it. So I guess that's going to continue to hold price. I really like, if the interest rate cuts are going to send price higher for the indices and lower for the DXY, this target to the downside here, I mean, we got 1, 2, 3, wait, 1, 2, 3, 4 pools of liquidity that support the potential down move. Of course, we got equal highs up here, and it's a consolidation, but you know, we'll see. You see this fair value gap in here? We got the delivery holding in there, so then we got the inversion here, but it's still a mess, right? Like we've been talking about, we've had the bonds and yields put to the side for a little bit until we get a displacement, but interest rate cuts the last 20 times when we're at all-time highs has led to new all-time highs getting created. So if that's going to be the case, this should rally the bonds, and you know, the yields should hold and continue to try to aim for sell side, if that is going to be the case. And we're not going to know until it happens. Okay? So that is what we will keep our minds on. Man, looking at the screens all the time is starting to really mess with my eyes. Yes, I gotta wear these very strong blue blocking glasses, because ICT's eyes are all messed up apparently. So protect your eyes at all costs, because if you don't got eyes, you can't be a trader. So let's go to the 1 hour. Yeah, the currency, look at the GU. It's got massive buy side equal highs up there. See this small fair value gap here? See the high, low? higher high. Notice how it didn't even attempt. This looks like it could be potentially delivering a market maker buy model. Then we got layered buy side up here too. So I'm going to continue to hold on to the perspective that these will go higher. They may stay in the range up at the end of the month. You know, it's just the risk we take when we're trading at the start of the month, first week, and the ending of the month being this the last week. So yeah, that's why we're being very patient. We anticipated this going into today, but we're going to still stick to the building blocks that we've determined that has supported us continuing to go to the buy side. Okay. Hey, do you guys have any questions? 6:30 is about to hit. Any last minute questions before we get into the open? Just let me know in the chat. You could just put a 1 if you have no questions. Just want to make sure everyone's accounted for. Okay, Tyler's cool. Joan, Mike, Tony, Fotis, anyone else? Freaking nose itches. All right, Joan, no questions. Hey, well, that's a good thing, right? If we just went through a ton of stuff, and if by the end of us breaking down a ton of stuff, there's 0 questions, I guess I'm doing a good job. Right. Toot my own horn real quick. But yeah. So let's see. It's going to be the moment of truth. So let's drop down to the 15-minute. Start seeing what price wants to get ready to do. So yeah, you see how we've worked the open price, the daily open price? You see how we're utilizing that, but also that first 30 minutes range? You know, we don't got to really worry about any type of sell side unless it was to get down below this level here. So we're all buy side or consolidation. Freaking nose itches, dude. I don't know what's happening. So keep my eyes on DXY here. Man, that is just a mess. Look at that. These overlapping candles. This is one of those low probability signatures. But again, that doesn't take away from the fact that lots of stuff is supportive of buy-side delivery. Seems like it's working out. So yeah, we'll see. This is a run on stops. Displacement here, getting above this high. That may set the stage for price to finally look to gravitate to these equal highs. Setting the low of the week, confirming the low of the week. Going into Tuesday here. So we go to the 5-minute. So yeah, this here, if it delivers higher, that's going to be a lower time frame market maker buy model. Accumulation, reaccumulation. So if it gets above this, expect it to hold. We got the regular trading hours gap here. So wait, where is there a gap in there? Why is my indicator not turning on? There we go. Come on, hurry up. Gotta load the damn thing. There it is. Okay, so here's the middle portion of the regular trading hours gap. I think this is going to give us the buy side delivery. Unless it gets back down below this regular trading hours gap, buy side delivery is, in my opinion, kicking into full gear now. So yeah, we'll see if we could stay above this regular trading hours gap. There's nothing to engage in here. If you trade the YouTube model, stuff like that, there's nothing to engage. Went from consolidation to one-sided displacement, going into the open. We don't have a first presented fair value gap left available either. Wait. Yeah, we do actually. It's right here. Very small, but nonetheless still relevant. Relative equal highs up here. It's targeting. Right, this whole delivery in here is nicely pushing price. Go to the 5 minute. Scroll up in time frame. See what else we can discover. Okay, so now we got a 1 hour order block. Not only that, we have this wick in here. So there's a 1 hour order block there. Let's go see if we can hang around on this 1 hour. 1 hour, 2 hour. Which time frame is retracing here? Okay, there we go. So let's see how the response is going to be from this and the first presented fair value gap. As long as we stay above these levels, I think if DXY drops, again, we're just further solidifying the fact that price is absolutely going to try to push to the buy side. So watch what happens here with this retracement. So very, very manipulative. Yeah, this low to that high again, we gotta watch that. Relative equal highs look pretty nice. Higher time frame, got an inversion of inverted daily fair value gap. All the other elements that support the fact that this up delivery here should fail to act as a balanced price range. If it doesn't fail, we start breaking down below these, then obviously you got to adjust. You know, but we're going to stick to the higher time frame, trying to continue to be bullish. You know, and we'll adjust if needed. So now we're kind of pushing through the first presented fair value gap. Let's see if it can get back above it. And if not, right, we'll have to just let price do what it's going to do here and go into the macro and see what it can give us within the macro. That being the 650 to 710 macro. Try to position for the silver bullet. So you have very deep retracement, wiping the floor with both, right? The buy side triggered and they trapped in longs. And now price is pushing. Now we've taken out the low here, so let's see what that turns into. It may just be a stop hunt. Yeah, we do got early executions in here, early buyers. We got relative equal lows here. Again, we don't want to see a price trade beyond this point here. Higher time frame wise, I would turn off our interest. You know, the only way that we would look to try to get into any buy position in here is if price gets above this, especially if we take this as we have, and then price just quickly races to the buy side. So we got the delivery to the buy side, sell side. So this is either going to hold and push price a little bit deeper, or it's going to invalidate this as a BPR and then trade above the first presented fair value gap. Use that as an inversion to then send price back to the buy side again. We have nothing in here for us to engage yet. We definitely want to continue to monitor how this high of the overlapped daily fair value gap below us is going to be used here. So yeah, let's see what happens. We're back above that first presented fair value gap. If that continues, that should be pretty nice. If we can get above this high, that'll be good, because this high and that low will then become our rolling balance price range and will now be above the overnight first 30 minutes, first presented fair value gap, and the regular trading hours gap. So then that could set the stage for us to start to really push, especially if we get that taking place inside of the macro. As we came down here, it kind of set equal lows, so that's a bit suspect. But we'll see. You know, it has been very, very back and forth here. So we'll see if it wants to continue to push. It would be an aggressive attempt to try to push buys into this. And you'd obviously have to find your model. You know, whatever that is, I don't necessarily think it's here. Oops. So yeah, we're above this high, so this should be able to act as a breaker. Also an order block. I think it's a 1 hour order block too here. So daily fair value gap high, respected it, broke above the 1 hour order block. Looks like this could potentially be a break or two. High, low, higher, high. Also an order block if we move up, if I'm not mistaken. Yeah. back to the 1 hour order block. Very sloppy high resistance right now. It's really to be expected because of what the DXY is doing, the end of the month, you know, so on and so forth. So we'll see what becomes of this. Yeah, we're watching if this is going to hold here. Let's see what happens. We're approaching the 5 minutes before the macro time window or element of time. So we'll see. See what happens. Bodies tell the story. Wicks do the damage. DXY still favoring a tip over to the downside. Nasdaq did breach the highs up here. We do got SMT at these lows here. So that's something decent. We do have that higher time frame SMT bearish, right? But we're going to need a lot of confirmation for that. To adjust from higher time frame bullishness to bearishness. And then of course for today, for right now, you know, we're spending a lot of time in this range here. It's not ideal. To spot an opportunity and see like this 1 hour order block deliver. It's not necessarily allowing for that to happen. Yeah, with that being said, we will wait because this is just punishing anybody trying to buy or sell. There's no models that are in play right now. So yeah, just gonna have to wait. What you see here is very typical of an end of the month type of delivery. It's not willing to do much of anything. You know, it's going sideways, you know, very much choppy. So this is when you would have to wait overall for time to kick in line. What is the main thing that indicate to you that price is going to hold above a high? Basically, PD arrays, liquidity being taken, intermarket relationships. You know, SMT could also play a role in that regard. But yeah, there's like a multitude of different factors. And kind of just like what the overall vibe's been. Where do we come from? Where are we headed? Specifically, it's going to be at the higher time frame view, though. You know, and just your understanding of PD arrays. And yeah. So now we got that breakdown, right? So now price is digging into any of the buy interest here, right? We're moving into the macro here. So we're going to have to see what that's going to lead to. Is it going to try to punish sell side? Right, we have all the way up until this level. It could short without turning off our higher time frame interest to go higher. Right, because we're rooted in the higher time frame. This is short term in nature, at least for now, because that higher time frame has not overall disrespected the ability for price to want to continue to go to the buy side. This is a pretty massive displacement. Again, we wanted to see if this daily fair value gap, like upper portion of it, would be very reactive. It was, right? It was holding. So now this displacement, we're going to really need to wait. We're going to have to get back above this and then see our model form. We did set equal highs here, so that's pretty interesting. there could be a slight argument that, you know, this just set up a bearish breaker here. You know, I'm going to be paying close attention to how this low, when it sweeps this low, maybe even if it gets down below this low, I'm going to see if we could start seeing price look to turn around a little bit. DXY is tanking, so that is still justifying a potential basically manipulative move taking place to then look to displace. Because our attention mainly for the draw and liquidity today, right now, given what we've just seen, we have this more near-term liquidity here, the fair value gap, and the relative equal highs that was just left. Right, but then later on, a little bit deeper, right? Power 3 looks like it's bullish still. And then it could look to target Friday's high. And these relative equal highs up here. We did purge this out and then decline pretty aggressively. So it did stop out early traders above the high up here and really trap them in. You know, scare the crap out of them, honestly. Yeah, we are inside now of this blue box, which is the other fair value gap, right? The bearish daily fair value gap. If we go to the daily chart, that is this one right here. So again, we're watching how this behavior is going to be. This does not invalidate buys yet. The huge drop does not invalidate our interest to want to go higher yet. You know, short term, yeah, maybe, right? Overall, it doesn't. It's highly risky to try to push a short in here, at least for the time being. Much less risky if it gets through this. You know, if this does turn into the time when price sets up the short ideas, right? Again, we got to wait. We got to wait to fully confirm that. And if it's not fully confirmed, we don't go against what the higher time frame is doing. Unless we are intentionally counter trend trading. And you have to know how to do that. I'm not going to put you guys in front of that, at least today, especially because it's the end of the month. So yeah, let's watch this. Let's watch this fair value gap here. Is that going to turn to an inversion after taking out stops? That looks pretty nice. Looks like a pretty nice situation here. DXY is falling now. So let's see what happens here. So we're stuck between this inversion, the daily fair value gap high, which I'm going to have more faith in, and the bearish breaker. This looks like it just opened up, manipulated into the macro. Run on stop, shift in market structure. Let's see if it can't give us a little retracement into there. That is something that I would be willing to put something behind. So yeah, we'll see. Is that breaker going to hold, invalidate this? And then in that case, we'll probably slide, probably attempt to get down here once more. If it's going to go higher, this is something that you would absolutely want to see. So we'll see if that's going to be what the game plan is going to end up staying. And maybe you didn't want to take this, right? Or maybe this isn't something you'd be comfortable with. Well, you could just wait till it gets above here to further confirm it, and then try to find something along the way. So yeah, we will see what it wants to do here. So yeah, it's either going to use this to go higher here with bearish DXY, or this breaker is going to prove that it wants to hold and push price lower. And you know, that could be potentially trusted if we get back down below this. But again, I'm sticking to the higher time frame. And what do you know? There's a signal for those of you that want to be getting signals from me. You know, hopefully you're paying attention. Offered quick 30 points right there. Let's see, is that going to survive? You know, because we do run the risk today of it being consolidated, because DXY and the bonds and yields are consolidating. You could even not take any of this and wait till price gets above here to further confirm. And then once you get your model forming in here above this high, which is a breaker, if it gets above that, you could then look to try to position yourself for a counter trend trade. That's also how you can pyramid. I don't encourage you to pyramid on days like this, weeks like this, because it's highly likely that things are going to be not very reliable. You know, it's the end of the month. You know, they want to punish you as much as possible. They don't want to increase gains when a month is going to end. Sometimes they do, right? More often than not, they won't. Oh, good job, Fotis. Hell yeah. Yeah, I would simply be targeting the high up here. And if it does all this and then still ends up going lower, that just kind of is a beautiful testament to how vicious it is today. And the overlapping DXY mixed with interest rate markets not really wanting to do much, it just highlights the inability price has to trend when that type of environment's present. DXY is turning, so that's not a good sign. But we'll see if it can kind of defy that here. Back above that first presented fair value gap. Look at that huge wick. This right here for the Dow may be an immediate rebalance. The XY is getting some legs in here, at least short term. It's kind of just back in line with the consolidation that it's, you know, navigating in between. Just back and forth, back and forth. Yeah, this right here was beautiful. So we'll see if it wants to continue. All right, we got this in here too. Notice how we closed above the mid portion of this, which should hold. Right, it's kind of didn't really close above it. It's kind of stalling right at it. So this is another layer right here. If it's going to be supported to go higher, we have an overlapping 1 hour order block. 1 hour order block. We have the first presented fair value gap, and we got this breaker that may get invalidated here. And then we have the fair value gap, shift in market structure. DXY, when it declines here, it may be what's needed to allow this to move. This right here is a fair value gap. Nasty. The S&P is nasty. The Dow too. Ugh. Intermarket relationships are not too convincing that we're going to be fully interested in aggressively running to the buy side. You know, the Kraken correlation could take place. It's the end of the month, but if the two sisters are not going to play ball, this sister is probably not going to do much either, and it may defy the run higher here. I wouldn't be surprised if they do push it up here and then hit this, then decide to drop back into the range if that's what they want to do. But you know, I think it's pretty reasonable, pretty likely that they'll get up here. You know, it is very, very sloppy, right? It is consolidation. Run on buys, attack on sells, and then all the way back inside the range here. So, you know, that's just what it is. So you got to make your decision with that information. Yeah, if you took this execution that I pointed out real time, ahead of time, as always, that was a beautiful run. It was like a 50-point run. Almost. Not quite, but almost. See, can it get enough legs to get up there? See what happens. 1 hour order block. If it's going to move, it's going to move right now. Inside of the macro, lined up with the PD array, time and price. You know, now, is that going to get us up here? It's a beautiful example, if it can get up there, of time and price working together. Time first, then price. PD arrays and liquidity mixed with macros and kill zones. It's very slowly trying to get to where it's looking like it wants to go. Really working that the first presented fair value gap. It's having a real hard time getting up here. See, can the Dow and the S&P start to move? We need DXY to fall here. Unfortunately, DXY is inside of the range, right? It's in equilibrium, and it's kind of at the top of a monthly fair value gap. It's at the high of it. So we're going to have to just see. All that's leading to this having a hard time trying to do anything real meaningful except this. That was meaningful. It's more than enough of an opportunity, and we gave enough time to get in. Secondary execution I mentioned here, if it was not this type of week, right at the end of the month, you know, this would have been something I would have looked the pyramid in. Right? It may eventually turn into, you know, in hindsight later on, may look to be something that would have been worthy of pyramiding in. I don't like this here. If I did pyramid and I saw this happening, I would have taken off the pyramid entry. So yeah, we're still holding this 1 hour order block, so it's keeping this likely to get up above this high up here, which is relative equal highs with the fair value gap. It's just very high resistance. Yeah, again, we're still inside of the macro. Still got 7 minutes for the macro to, or yes, wait. Yeah, 7:10. 7 minutes. All right, 6:50 to 7:10 would be over here. There we go. Awesome stuff. Yeah, 50 points. There you go. Good job, photos. Yeah, secured the bag, stopped in profit. Good job. You could feel this high resistance in here. You could feel it. Like it's just like, oh, it's almost there. Nope, almost there. You know, since it's high resistance, they could very easily sweep the low here, get them out, then continue to go. You know, we are inside this 1 hour order block here. That's a very nice 1 hour order block, and it's holding. DXY is not necessarily too excited to dump. And we're kind of just sideways across the indices. So we'll see. We'll see if we have enough juice in this lemon to get up there and blow that out. That's simply all I would be really aiming for at this point. Just seeing how things have unfolded. But this here, from this low to that high, the inversion, you know, that was more than enough. So, you know. You're welcome, photos. So let's see what this turns into. See how it came down and swept out that low there? In high resistance, generally all the time though, but in high resistance, and if you're expecting big moves to take place, it's always going to consider taking out a stop, right? It's always, before it moves, it's always going to take out some type of opposing liquidity, even on a near-term basis, especially if you're inside of a little range like this. It's going to almost always require that you run out some type of liquidity first, then it'll go, if it decides to go. So we'll see if that's going to be the case here. Very high resistance. Love me some freaking water. Love me some freaking water, yo. Okay, so we should not lose this fair value gap. We should be able to stay above this 1 hour order block now. It kind of depends though, because now we got DXY kind of accelerating. So it may upset the ability to go. We got all the other indices falling in line, it seems. So yeah, we'll see. We'll see. Get up there. Here, use my cursor. Go, go, go. Slap it. But yeah, so far this has been a fun call today. So we'll see if it can finish off that, and then that'll pretty much be all I'll be willing to really look to participate in. Because now it's just looking like DXY is kind of getting some legs, really preventing this from going in any accelerated capacity to the buy side. We've kind of whipsawed across both. So this high to that low, you could see this is already an order block here too. Not only that, it's also a breaker, right? Here we go. Let's go. So yeah, the pyramid here has proven to be, or proven to have been, a good opportunity. So yeah, let's see what happens as a result of us hitting this. Is it going to pull us back into the range and consolidate? Or are we going to give it a nice push? All the indices are now back in sync. We now got a bullish breaker. So yeah, if we get down below this breaker and try to target this, that is not something we want to deal with. But yeah, all profits would have been taken off. Or most of it, right? If you had a couple contracts on, most of the overall trade has pretty much been liquidated at this point. Coming back to that 1 hour order block. It's a pretty strong rejection here. It's just, this is high resistance. You could feel it. You could see it in price. You know, so 20 to 30 points is ideal. Yeah, look how it's worked that 1 hour order block. See how important the higher time frame is? Yeah, so yeah, now back to that fair value gap. And yeah, just what has taken place so far. If, say I didn't take an execution in here, we would have to see what this is going to do, and it would have to give displacement, potentially even getting back above this breaker here. But if I wouldn't have taken an execution in here, this would have been something I would have been thinking about, because it's a breaker. But then, of course, because it's high resistance, it dug way deep into the breaker. And we could use the wick on that breaker candle. DXY is opening up here, so that pretty much, you know, given how nasty this is so far, that would turn off any interest to want to participate further. Unless, of course, it opens up. We're outside of a macro now, so you know, we may just have to continue to monitor. If an execution wasn't taken, that's what I'd be thinking. We're at this 1 hour order block though, it's still respected. You know, nothing's bearish, right? I'm not thinking sells just because it's done this, but it is something that you'd have to be more cautious on. You know, you'd have to wait. It took stops here, so if it's going to move to, you know, these highs up here, it'll probably use this delivery to do so. Got this order block here too. See if we can't get it to accelerate here. After the stop hunt. It's really hugging that. See how it's hugging that 1 hour order block? This stop raid may be something that proves to be significant. Yeah, this here, like I said, that's a bullish breaker. See, it needs to get above it though. If it's going to be usable, it's a push outside of it. Looks like it's just setting that up in here. Peaked above, came back down, high resistance behavior. Look at how back and forth. So yeah, if we can get above this, we'll watch and see if we could take out further buy side delivery. But the way the price has been behaving here, how slow it's been, I don't have crazy expectation that we'll get up there. Maybe up to here, right? Go from this low to that high, get that projection. Maybe it gets up there. If it blows beyond, I'll be surprised. But it can honestly fill out the entire daily fair value gap if it gets excited enough. Yeah, since we've left this 1 hour order block, it should hopefully not have to come back down. It shouldn't have to come back down, especially if it breaks above this. We should be set to see this breaker deliver in here to the buy side, especially if DXY can fall. And then of course we got the wick here too, so that's going to potentially be significant. That is if we get above it. All right, it has to trade outside of it. If we displace through this gap in here, this fair value gap, that'll be good too, because it'll be a balanced price range if it returns into it and continues, because then it would have sell side imbalance to a buy side imbalance that overlaps, and you guys know that's a variation of a balanced price range. All right, but it basically came right to this area. So again, this is obviously all just like observations. You know, the best entry was down here, which we gave ahead of time. Yeah, then, you know, there was a secondary one in here if you wanted to use that. Get us up above the high. A little more risky, but, you know, it was there. It was available. Of course, if it's not within your model, it wasn't available. There's nothing for you to worry about. But hopefully all this stuff makes sense as far as what we're looking for price to do. There's no SMT at the highs, so there's nothing to worry about in that regard. It was a bullish SMT, higher low, lower low. So the Nasdaq's been the strength holder slightly, but for sure high resistance characteristics here. So very slow mover. Again, that's brought upon by DXY being consolidated and the bonds and yields not trending. That is highly supportive of high resistance, consolidation, and just a lethargic behavior in the indices. And you could see that manifesting in here. Although we were correct, right? Although we're on the right side, that's just something you have to pay attention to. Because if you're not paying attention to that, you know, this is a time when you could be correct, but still be negative on the day. You know, you could know where price is going, but still lose. DXY is really accelerating. Should open up the indices now. See how that mid portion was respected on that wick? Cha-ching. Beautiful delivery. Notice how it opened up finally when DXY starts to open up. That is very clearly the importance of intermarket relationships and what happens when it's in line versus when it's not. Cracked in correlation, when it's in consolidation, what that does to assets it influences in terms of the DXY. Remember what I said, how it displaced through this? We could potentially put the allowance for price to retrace into it a little bit, but we don't want to see it get back down below it. Well, our narrative has been 100% on side, which is always a good thing, right? It's always a good thing. Hopefully it made sense as far as why our opinion's been what it's been. Hopefully you've learned something so far. Probably after this delivers, though, we'll probably put a ribbon on it soon. Call it a day. We've called out one opportunity. I talked about how this could potentially have set something up. I talked about the breaker here. Talked about the wick in here. So think, where would you have been the most comfortable? Shouldn't have to come down here. It's high resistance, so it might want to, but we got this high that overlaps that, so we should just use this and then maybe finish off the rest of the fair value gap here. That was a pretty nice run aside from this chop fest right in here, and we were able to position well enough to take down this. Some students took that, but you could have also done something down here too if you trusted what I've been talking about. You stick to the higher time frame. I talked about the 1 hour order block, talked about the breaker. This is another breaker in here, high low, higher high, breaker in there, the candle, the up candle. Positioning there is nothing wrong with that either. All right, so let's see how much further it can go. Still got a little more to go with the fair value gap. Notice how I said this lower fair value gap shouldn't get tapped into. Did it go down there? No. Why? Because what I'm telling you is the truth. Now, will it get there later? Maybe. It's high resistance, right? It could. For now, though, up to this point, it's failing to get down there for that reason. This high to low, delivery through it, generally that's going to act as a balanced price range. Because if this is an order block, that's a BPR. If the high overlaps a displacement, there's no need for it to go down into that unless it finishes off a PD array or liquidity pull and then decides to retrace and come scoop up the opposing view. Right? Try to unseat people. Let's see if we can finish off this delivery. I want to see that happen. It may not, right? But that's something that I would like to see. DXY is opening up. So again, let's see if we can get another wave of displacement here off the heels of that. Got cracking correlation. So we may get a stall out effect. It may stall out. It is inside the fair value gap, so and maybe that's all they want to really do. that wick there too. That's important. That's why I never traded really into it when it got above it. Similar to what we just talked about in that, lower time frame. Right, the wick here overlapping that makes it unwilling to want to get down there because it just needs to trade through this. All works the same when you move up in time frames. Like a large wick like this. Damn, on the 30-minute, it pretty much filled in the whole fair value gap. On the 1 hour, it didn't. It has still a little ways to go on the 1 hour, but maybe it just uses that fill of the 30-minute and then comes back in the range because of the high resistance scenario. We'll see. It's definitely hanging around this upper portion of that 1 hour fair value gap. It's not really looking like it's too excited to move. See, could we just get like one more pump through it? Just to complete that delivery. Morning, my brother Harley, bro. I was just talking about you earlier. Freaking superstar. It's always good to hear you, or to see you. Let me know how you've been doing, brother. I haven't heard from you in a little bit. I want to check up on your success and see how things have been. Yeah, we called this entire move up here. So yesterday we did amazing. Today we've done pretty amazing, and now it's gonna fulfill what I want to see it do for the day, and that'll be probably when I start to bring things to a close. We'll see what happens after that. Yeah, what a move. 80-point opportunity was given. Before the fact, per usual. So yeah, I guess that's enough to classify it as completely trading into it. So yeah, we'll see. DXY accelerated. Notice how when DXY pulls against the run higher here on the Nasdaq, look what it's causing, right? When it opens up on DXY, it moves nicely. When it turns against it, right, basically favoring a retracement or downside, you could see that it's, the uptrend starts to stall out. Same with when it's cracked in correlation. If it's cracked in correlation, it becomes a lot harder to see clear delivery, clean delivery. And so you got to manage your risk accordingly. But I think 80 points is enough. What do y'all think? Anywhere from 30 to 80 points today, if you guys chose to participate. Doing very well. Literally staying away from everything social media related. Trading high probability. Yeah, dude, I'm super proud of you, Harley. Absolute superstar, dude. Amazing. I was talking about you earlier. Like I said. So yeah. So congratulations as always. I'm glad to hear that things are still going good. And yeah, there's no need to be on social media unless there's a reason for you to be on it. Maybe to help people, or if you have your own thing going on. Those are the only two reasons. Anything else is distraction, negativity, and drama for no reason. And you know how that could plague you, so, and everybody else, So yeah, once you know what you're doing, if you don't have an intention to do something to help somebody or do, anything of, that kind, social media is not, it's useless. What do you want to do? Look at all the drama? Is that what you want to fill your mind with? As a trader, it's probably not the best thing. I only have social media because I'm here to help you guys. If I wasn't teaching or helping or going live and trying to, move people forward, I would not have a reason to be on social media. I don't care about the drama. I don't care about other people's lives, right? Like their car or their house or their success has nothing to do with me. Doesn't help me make money. Lambos are a depreciating asset, by the way. So you buy a million, however much it costs, 250 plus thousand, you leave the lot, it's already now down to like 100K that it's worth. That's just how cars work. Instead of buying a Lambo, you should go and buy an asset. Go buy a home. Rent that home out. Build a rental property portfolio. That's what ICT does. I think he has like 13 properties. Plus his main home. It's taxes, right? Tax benefits. And actually appreciating assets. And that's why he says he doesn't have to trade ever again. Even if he stopped trading and lost all his money that he made from trading, he already has enough other incomes outside of trading. His YouTube, he has, other businesses like rental properties and things like that. I think he has other things too that he's never mentioned, but he says he has multiple. And that's what you want to do. You want to have a plan for that before you get to success. Because once you get there, it's a rush. It is a huge rush to know that, holy crap, like I can at will go in there and make money like an ATM. Literally. So you want to make sure you're prepared so you don't self-destruct. And you know where to put your money. Yeah, so if I was in a trade here and price did this, I would already be out the trade. If I was expecting it to take this high out, I would already just be like, all right, time to dial it back and be over with, because it may not want to get up there, right? It may just look to come back into the range because it's been high resistance, and it's already delivered about 100 points from the low. Yeah, a little 120 exactly, or thereabouts, right? And then we've also hit the opposing higher time frame PD array. That being the 1 hour order, 1 hour fair value gap. So yeah, now we've traded into this, which is something, if we're quickly going to be bullish and quickly start targeting buy side still, that is something we would not be favoring at all. That would not be something we want. So it may just come down and sweep this out because it's high resistance, and then look to go again. If we do get another leg, it would, because it's high resistance, it would potentially need to take this first. Any big run comes from a stop hunt. Any big run comes from a stop hunt mixed with the higher time frame. Any crazy meaningful moves will also, within the weekly range, come from Tuesdays and Wednesdays. Sometimes Thursdays and Fridays. But for the most part, Tuesdays and Wednesdays are generally the best. So yeah. So yeah, I guess with that being said, we'll put a ribbon on it. We talked about a lot today. This is worth the rewatch. Everything was 100% correct. Where we thought price was going to go, how we navigated price. I'm very satisfied with that today. Some of you guys executed and participated of your own decision, not mine. I didn't tell you to get into a trade. The same financial advice. But, hopefully today was at a minimum profitable for your learning. And some of you guys that did take it upon yourself to make your own decisions and execute based on framework that I mentioned that made sense to you. Good job. Okay. Make sure you note today is a high resistance day. It wasn't a low resistance until, a couple little phases, right? Like in here and then in here, and then it went back to high resistance. Right? So yeah. With that being said, again, I hope you guys learned some stuff, and continue to be safe the rest of the week. I'll see my private group students tomorrow. But yeah, for the rest of you guys, definitely be safe. Don't do anything stupid. And I will talk to you guys on Sunday. Let me go and look through some of this real quick. In the next year or so, most likely start posting on social media. Kind of what you're doing, how to build all the good habits. Yep. Absolutely, Harley. That's very wise. I'm proud of you, dude. You're literally a picture perfect example of taking good advice to the max. You know. And just, you know, staying dedicated and really, really digging into things. Squeeze people out of housing. Yeah. Yeah, BlackRock does skew people or squeeze people out of the housing. They're buying up multifamily homes, jacking up the rates, making it so nobody could buy anything. Ridiculous. It needs to stop. It needs to stop. And yeah, I appreciate you saying that, Harley. I appreciate you saying that. Hopefully I get to see you do the same. You know what I mean? If not, you know, the same, better. You know, and you're young. You're super young. You have I think 10 years on me. So you're in an amazing position. Just be very smart with your money if you want to have those types of conversations about, you know, like future structure for your trading business. We can start to have those conversations too, because you're, you know, really approaching, you know, that phase, you know, aside from scaling, what you're already doing. So yeah, I would be happy to have those conversations with you. Okay. But yeah, with that being said, God bless you guys. Those of you on YouTube, I'll catch you guys on Sunday, or maybe in the free Discord. My private group students, I will talk to you beautiful people tomorrow morning. Let's go see. Probably around 6 because there's no news. And we'll just take a look at what's happening. We're not going to do too much. All right. So, yeah. So with that being said, I will catch you guys on the next one.